Thank you for joining me. I'm Alexandra, and I want to talk about Google, or, that's not what the company is called anymore, I guess. So, Alphabet. So, they make Chrome, also Google, you know, also phone these days. So, current stock price is $2,121.90, which gives them a market cap of $1.42 trillion. Revenue $182.5 billion, earnings $40.3 billion, which gives them a PE of 36 with a forward PE of 32, so exactly the same as Apple. Not exactly, but pretty close enough. Dividend is 0. I don't really expect that to change, but for a company that makes a profit of $40 billion, you would think they would have a dividend eventually. Obviously, these days stock buybacks are pretty common, so could just go that way. Total assets $319 billion, total liabilities $97 billion, which gives them a total stockholders' equity of $222 billion, and a really nice balance sheet. I really like the assets to liabilities ratio here. Obviously, even $200 billion pales in comparison to the $1.4 trillion in market cap, so but it's a really nice balance sheet. Risk factors are pretty much none. So the biggest search engine in the world is Google, and the second biggest is YouTube, which is also Google. So there's many products that they have that there are competitors for, but it seems like none of them really come close. So overall, I don't think there are any risk factors. Google is more in the business of disrupting other companies than being disrupted by other companies. And so I don't think that there will be many new risk factors coming out. So for a growth investor, growth of 10-ish%, obviously not that interesting. Probably still a decent buy, but definitely better opportunities out there. For a dividend investor, there's no dividend, so obviously nothing to see here. For a value investor, I really like this balance sheet. I really do like the revenue growth, earnings growth as well. The PE is just slightly too high, but I still wouldn't blame anyone for investing in this because I think that the revenue growth kind of makes up for it. Also, it's a very stable company, a very safe company, and I think that they're going to be around for a long time. So if you're a value investor, definitely look into this, but if the PE is just too high for you, I kind of like to keep it under 20 or under 15 if you can find that. So a PE of 36 isn't great, but I don't expect that to come down a whole lot. That's it for me for today. If you like this video, make sure to subscribe and quite more videos every day before market open. I hope you have a successful day.